Mortgage rates are on the rise. What does this mean for affordability? What does it mean for your mortgage payment? What effect has it have on the housing market, and what effect is it going to have on the 2023 housing market, specifically prices? Stay tuned. I'm going to get into it. I'm going to tell you what I'm seeing, hearing, and feeling on the streets of my multiple markets that I'm working in, and what I expect to see in the future. All right, Matt the Mortgage Guy, residential mortgage broker, helping hundreds of people buy homes every single year, talking to dozens of real estate agents week in and week out, and then bringing you that information, what I'm seeing, hearing, and feeling, so that you can make educated decisions on your home buying process. If you want to connect with me and my team, greatmortgagebroker.com. If you want to connect with a realtor in your area, homeandmoney.com/Matt. In this video, I want to talk about mortgage rates peaking up above 6% again, what I think that is going to do and has already done with affordability, the amount of demand on the buy side, and in turn, what that does to housing prices. Because I think as I've had more data, as I've been able to talk to more folks and see real life examples of what this is doing to people's mortgage payments, I may change my mind. And I reserve the right to go from one stance and one view and one prediction about what might happen to housing prices to a new one. You might be surprised on what I think is going to happen in 2023. So stay tuned to the end of the video when I tell you what I think is going to happen with housing prices. Before I do that, I just want to give you some examples. As interest rates rise, we all know that it hurts affordability, but I like to give real life examples of some true numbers, so people can understand it. Because when I talk to somebody who might not necessarily be in the market to purchase, and I tell them what the numbers look like, sometimes they're astonished. So real quickly, $500,000 purchase price could be less in your market, could be more in your market. In a lot of the markets I work in Northern California, this is an entry-level, first-time home buyer price. When we look at 3% down, 5% down, 10% down, the loans that most commonly first-time home buyers are using, it really is kind of shocking when you see what happens attaching a 5.75, a 5.5% rate to something like this. So I'll put this up on the screen so you can see it. $500,000 purchase, 3% down, 5.75% interest rate. Principal, interest, taxes, insurance, mortgage insurance, all in, you've got a $3,620 payment. And as you could imagine, entry-level buyer, first-time home buyer, 70, 80, 100,000 in income, maybe combined with two borrowers, it's a big payment. That's a really big payment, right? And so, of course, home buyer demand is at a 22-year low. These mortgage payments that are attached to these purchases are high. Not everybody has 20% to put down, hundreds of thousands of dollars in down payment, right? And just for a quick example of what that same $500,000 purchase price looked like at 3%, I can change my spreadsheet to 3%, $2,835 payment. So, on a lot of different loan products since the beginning of the year, we've seen 2.5%, 3% increase in the rate. It's an $800 difference to the payment on this specific scenario. If you put 5% down, it's a little bit better, but it's still $34.12 a month. If you put 10% down, it's a little bit better, but still $32.34 a month. That's a big mortgage payment for a lot of folks. This is why we've got some folks that are unable to qualify. And then on top of that, we got people that do qualify that choose not to buy because they don't want to attach a $3,200 mortgage payment and be locked into that. So what effect is this having on the market? When rates go up, it's less affordable, less people can afford to buy, and less people decide to buy. Well, as you would expect, Homes stay on the market for longer. Sellers need to reduce their prices. I just saw a stat that 1 in 5 sellers are reducing their prices nationwide. In some markets, the hottest markets where things were selling super quick, you might see 50, 60% of the homes on the market have received price reductions, right? And they may have started too high. They might have been unrealistic. So it's not necessarily saying that prices are coming down, but a ton of price reductions. In Sacramento, California, where I'm based, we had stuff flying off the shelves in 2000 and 2021. My good buddy, Ryan Lundquist, SacramentoAppraisalblog.com, just put out something about average days on market in Sacramento County, September 2022. It's up to 32. 32 sounds like a nice balanced market, but compared to where we were at, where things were selling in 11, 12, 13 days, 32 sounds like a lot. Last September, that number was 15. If we go back to 2016, 32 might fall in line with 16, 17, 18, 19, 30, 26, 30, 29. But it's still the highest number we've seen in those last 8 years. And I truly believe, if I'm being honest, the worst is yet to come. Mortgage rates continue to rise. The Fed talks about doing all that they're going to do in these next few meetings to tamper in inflation. They're going to continue to raise interest rates. So as we slowly tick above 6%, for us to get to 7% isn't that far-fetched of a thought, and it's going to even further damper demand. It's going to put pressure on sellers. Sellers are going to have to lower their prices. So stay tuned, because mortgage rates rising doesn't always mean that home prices are going to come down, but I think in 2023, that's exactly what we're going to see, right? I don't subscribe to 30, 40, 50% home price depreciation, the doom and gloom, all that other stuff. Real estate is local, so be aware and be advised. If you're in Phoenix, Arizona, Boise, Idaho, parts of Florida, parts of Texas, even Sacramento, where I'm based, where things ramped up and were very, very hot, 30 to 40% appreciation in 20 and 21, we might see a stronger pullback than other markets. We might see 10, 15% home price appreciation over the next 18 to 24 months if rates go up to 7%, if rates stay at those elevated rates for a sustained amount of time, because it just isn't feasible for enough buyers, enough demand to enter the market to keep prices where they are. That's just my 2 cents. Truth be told, this latest round of rate hikes, these latest talks from the Fed, this latest upward pressure on mortgage rates has changed my tune a little bit. I was a firm believer in the fact that we were short on supply and short on demand. It was going to balance itself out. We're going to have less home sales. 4.4 million is a prediction for 2023, but it wasn't going to affect prices as much because both sides were low. Supply was low and demand was low. From what I've seen and from what I've heard, I truly believe demand is being strained more than supply. And, you know, it's going to really have to be home prices coming back down to earth sometime in the next 6, 12, or 18 months. It'll be a healthy thing. It'll be a good thing. So leave your comments down below. Let me know what you think. Let me know in 2023 as a whole. The latest monthly stat was like down 0.8%, 0.77, I believe, on home price appreciation, which if you stretch that out over 12 months, you know that's about a negative 9.6 home price depreciation, right? As much as I've shied away from it and I've tried to say, listen, home prices can't come down, we don't have enough inventory with it, I think in a lot of markets, they have to. There's just no other good answer. Mortgage rates aren't coming down to save us when it comes to affordability. Mortgage rates are higher, and with that, there's not enough affordability. There's not enough on the demand side. We're going to have to see some price depreciation, which will be a good and healthy thing. If you agree, if you disagree, I'd love to hear the comments. I'd love to see what your predictions are for 2023. Do you think we're going to see 5% appreciation? Do you think we're staying flat? Do you think it's going to go down 10%? Do you think the housing market as a whole might go down 20%, 30%? If you're doom and gloom 30, 40%, I don't know. If you believe that, leave me some reasons why. I'd love to have a healthy discussion in the comments. Thanks for watching. Hopefully you find value in this. Again, greatmortgagebroker.com. Connect with my team. We're happy to get you pre-approved. We're happy to show you all the information, help you make educated decisions. Whether now's the time, the future's the time, we're happy to help you get pre-approved. If you're looking for an agent in your market who can help assist with all the great things that real estate agents do in your specific market, homeandmoney.com/Matt. Thanks for watching. Until next time, the only thing we're sure of is we gonna see.